Courtiers Fund Manager James Timpson is with me to talk about markets throughout April. James, hi. What do you know?
Hi Leo. So April actually turned out to be the most volatile month of the year so far. So early on you had the tension in the Middle East and then US inflation data came out, and it came out hotter than expected. So this has fueled fears that rate cuts by the Fed may come later than expected. So the US market, measured by the S&P 500 index, that declined about 4% during the month. And the VIX index, which tracks implied volatility in the US market, that reached its highest level since October last year. So volatility did pick up last month, but overall returns for the year are still positive.
What's been happening in the UK?
So the UK actually had a much more positive month than the US. FTSE 100 index actually returned over 2% during the month, fueled by exposure to commodities and also some positive domestic data. So our own inflation here in the UK, that's come down to 3.2% now, which is the lowest it's been for about 2.5 years. And also the UK composite PMI, which tracks manufacturing output and services business activity, that's positive for the 6th consecutive month and is now growing at its fastest rate for over a year. So some really encouraging economic data in the UK has meant that actually the UK has outperformed the US in the last month or so.
We've got volatility, which means managing risk. You've got positivity. Does this open any opportunities that you've identified?
Yeah, so we've long been very bullish towards the UK. It's showing such good value at the moment. So we've actually been overweight the UK relative to the market as a whole, underweight the US. The US, amazingly, because of how huge it is now, makes up 70% of the global developed equity market. Whereas in our growth fund, we have about 40% exposure to US equities. And as for UK exposure, we have about 25% exposure, whereas the market as a whole, just 4%. So that shows the disparity you've got between the developed nations at the moment, whereas we're much more, we much prefer diversification rather than having so much exposure to the expensive US market. We're underweight that and we're overweight the UK, which we've long been positive about.
So the good old crystal ball, James. Any thoughts on how the year might be rolling out?
Well, obviously this year we've got 2 big elections coming up. We've got the US presidential election, of course, and at some point this year we're expecting a UK general election. So I think maintaining as much diversification as possible is the correct thing to do, because you never know how those elections are going to turn out. You've got the ongoing uncertainty in the Middle East. But of course the big thing that is really driving markets at the moment is when are central banks going to cut interest rates? That's what tends to drive the big day-to-day movements that we sometimes see. So I guess it's all about what those central banks are going to do, and I guess things like inflation data and economic output, those will help determine when they decide to finally cut rates.
Sounds like an exciting time for the investment team then.
Absolutely.
James, thank you for the insight this month. I look forward to catching up with you again next month.
Thanks, Leo.
If you have any questions, please speak to your advisor or let us know via the website or give us a call. Thanks.